we're diving into the process of preparing a bank reconciliation. This crucial step ensures that your financial records align with your bank statements, providing accurate insights into your cash flow. First, gather your documents. You'll need your bank statement and the cash book or general ledger for the same period. Make sure you have access to any outstanding checks or deposits that weren't included in the previous reconciliation. Start by comparing the opening balances on your records with the bank statement. If there's a discrepancy, you might need to investigate further to ensure last month's reconciliation was completed accurately. Next, check off each transaction in your cash book against those listed on your bank statement. Make sure to verify all deposits and withdrawals. Identify any transactions that appear on one record but not the other. Now, it's time to record any discrepancies. There might be outstanding checks that haven't been cashed. List these checks and deduct them from your bank statement balance. Similarly, consider any deposits in transit, which should be added back to the bank balance. Pay attention to interest earned, bank fees, or any service charges that may not have been recorded in your books. Update your cash book with these items for a complete and accurate record. If your bank statement includes any errors, such as unauthorized transactions, contact your bank immediately to resolve them. Confirm the reversal of these errors in future statements. Finally, adjust the balances. Your aim is to have both the adjusted bank statement balance and the adjusted cash book balance match. If there's still a difference, double-check for any missed transactions or miscalculations. A successful bank reconciliation ensures that your financial records reflect an accurate and up-to-date snapshot of your business's cash position. It's recommended to perform this process monthly, fostering better financial management and preventing potential fraud. And that's it. You've completed a bank reconciliation.